All right, we're live. Hello, and welcome to David DeFord's channel. My name is JD, and I have taken over the channel today. We're starting a new show, a weekly show we're going to be doing called Ask an Agent, and we're going to be doing this weekly on Wednesdays at 1 Central. It's actually noontime here in Colorado. And really my job here today is to have a conversation with Mr. Heath. And we're going to be fielding your questions. The way that this is going to be structured is we're going to talk today about 3 mistakes to avoid as a new final expense face-to-face agent. And at the end of the show, towards the end, we're going to start fielding your questions. So make sure you punch those into the chat so that way we can answer questions for you. Both you'll get his experience as well as mine. So in case you don't already know him, I'm going to give a quick introduction to Mr. Heath. He is our face-to-face trainer in our program for final expense. So he's for the independent brokers. We've got another trainer that's for our career program, and then a third trainer for Telesales. So I'm a face-to-face agent, like I mentioned. I've been trained by Mr. Heath himself, so I'm kind of a student of his training and everything. So it's a big honor and a big, well, he's a good friend of mine. I just want to say welcome to the show, Mr. Heath. Thank you for being here.
Thank you, JD. I appreciate you having me on and ready to hatch it out with some good talk today, hopefully.
Yes, sir. And so again, what we're looking to do here, we're going to talk briefly about three common mistakes that new agents make out in the field. I'm going to provide 3 first, and then Mr. Heath is going to give his 3. And then if you have any questions on anything that we've covered today, or just questions in general about DeFord Insurance Group, about working with us, feel free to throw those into the chat, and we'd be happy to get to those towards the end of the show. So to kick things off, I'm going to start with my 3, like I mentioned. The first one that I will say is, the biggest mistake I see final expense agents make is choosing the wrong agency to work with, right? And so what I'll tell you is you've got really 3 different options, the way that I look at it. You can either go to a captive agency where you can only sell their one and only product, or B, you can end up going into a MLM where the primary strategy is for you to recruit other agents as opposed to mastering the product yourself and learning the sales process and becoming a salesperson, right? That would be the second choice. The third choice is going to an agency where you have the opportunity to work as an independent broker, right? And so the advantage there would be, as an independent broker, I have a multitude of carriers that I can choose to offer to my client that I can tailor fit to them, that's going to give them the best bang for their buck based on their qualifications, what they can qualify for. Additionally, some of those captive agencies, they don't have the wide offering of carriers and products to sell. And so they're not going to, they may have clients that they run across that they just don't have anything that'll cover that person because of their age, a health condition, etc. Whereas an independent broker, you have the opportunity to choose from the carrier. So again, my first mistake is that I recommend avoiding is choosing the wrong agency to work with. Dave, what do you think about that?
Well, JD, I think you better be glad you're going first. Because yes, that would definitely be on my list. You know, it is very difficult to make it in this business. We see oftentimes 93% failure rate. And that's because a lot of times they don't choose the right place to start. It's kind of like a lot of times it's a one-time shot. I've heard it called a leap of faith, a lot of different things. But you need to make sure you're with the right person at that time, the right group, to make sure you're getting all the essentials that you need.
Got it. Yeah, I agree. And I'll tell you, my next mistake that I recommend avoiding is one that I have been personally guilty of doing myself, and I'm speaking from experience. And that is to mess up your lead flow. As an independent broker, or as any insurance agency, really, your business relies upon a consistent flow of leads coming into your business in order to have a consistent output of having consistent sales to put food on the table in your house, right? And the only way, or the primary way, that the means of you generating business is by going out and buying leads. Now, Some of us try to get smarter than the process, and I've had recommendations from Mr. Heath on exactly how to purchase leads in order for them to flow consistently. But some of us are a little bit hard-headed and have to learn the hard way and experiment with things, and essentially can ultimately screw up your lead flow, which if you don't have leads coming in, then you're not going to have the applications and the money coming in for yourself, right? So I would recommend, so what does it look like to do it the right way? So depending upon your strategy as a face-to-face agent, you really have two different choices as far as your lead sources go, right? You've got the tried and true direct mail, which I'm sure Mr. Heath will shake his head and say, yes, do direct mail. And then the other option is digital leads, right? Primarily those are being generated on Facebook. Now, depending on which one of those you're doing or both, depends upon when and how those leads will come in. So as a direct mail lead, those typically take a turnaround from the minute you place the order till you get the first lead in your hands. That could take on average from around 2 weeks at the quickest to about 4 weeks at the latest for them to really start coming in the bulk of your order. And they're going to trickle in after that, you know? So if you're buying direct mail, what you need to make sure is that, number one, you're buying every week and having to make sure that you're consistently setting yourself up 2 to 4 weeks down the road for those leads to come in consistently. I, however, made the mistake of I was running both leads at the same time, direct mail and Facebook. I got behind on my direct mail leads. You know, they're starting to pile up on me. So I pressed pause on it, and then I just never pressed play again. And so 3 to 4 weeks down the road, when those leads stopped coming in, I was kind of in a jam, right? I was kind of in a dry spell because I didn't have enough leads to work. The worst place in this business to be is not having people to get in front of. The best place you can be, the best mistake or problem you can have is having too many people to get to, right? And the beautiful part about doing direct mail, which I'm sure Mr. Heath will agree, is that those leads, I call it live longer, right? They will stay fresh longer than a Facebook lead. If you go any more than a week or two on a Facebook lead, they're going to have less memory or recollection of filling that form out, as opposed to direct mail, where they got the piece of the letter in the mail, they hand filled it out with their own writing, and then went and put it in the mailbox, right? That's going to stick in your mind a little bit longer than just punching in some information on a Facebook lead. So again, the number 2 mistake that I'm mentioning is screwing up your lead flow. Heath, you got anything to add to that?
Well, that's probably the most common one I actually see, JD. And the reason is you get busy and you've got all this going on as a new agent out in the field. You're writing business, you're getting leads, you're running leads, you're door knocking, and you forget to order on Monday. My recommendation, if you start a lead program, set it in your calendar every Monday to order leads from now on. And that way you'll get a reminder every Monday morning, because the best way to do a direct mail is to just mail out every week. And then you run into the problem JD talked about. You get a little too many. Some of them over return. That's a good thing. It's not a problem. But knowing when to turn it back on. So I'd keep that alarm set every Monday and don't turn it off. And that'll be a reminder to you. Yeah, I may need to order some more. I'm down to 30 leads. I need to get more, whatever your number may be.
Yeah. And the same thing could actually be said for Facebook leads. So without naming names, one of the lead vendors that we work with, and I recommend if you're going to use Facebook leads, you're going to need to do one, if not both of these things. You're going to need to, number one, you're going to need to switch up your lead vendor, right, on a weekly or monthly basis. So that way the people aren't just seeing the same ad over and over and over, and you can kind of wear your ad out in the one location, or you're moving the ad around to different locations. So if you're in a situation like, let's use, for example, I'm from Texas, let's say DFW, right? And so you're moving that pin one week it's going to be in McKinney, or then it's going to be in Denton, or then it's going to be in Dallas, or then it's going to be in Fort Worth. You can kind of move it around so you're not targeting the same people repetitively because you can wear them out, right? And so for Facebook, you want to make sure that you're moving that pin around the location and or changing the vendor that you're using from week to week in order to make sure that you're not just getting the same leads over and over and over. But the reason why I mentioned that is because each one of these lead vendors are going to kind of have a different time that it takes them to generate the leads, to fulfill the order that you place. So we have a carrier that's known to take, you know, a week sometimes or more to fulfill the order of 20 to 40 leads for that week. And we've got a different vendor that will fill them in 3 days almost consistently. So what I've got to move to for Facebook is starting that lead, the Facebook leads on Monday. And if I don't have enough by Thursday or Friday, I'm placing another order with a different vendor to make sure that I've got enough people to see for that following week. So again, just making sure you got enough people to see, you've got enough leads is the best place to be in the business. Do not make the mistake that I did of screwing with your lead flow and not having people to see or talk to. So next one I would say is it probably, to me, Dave, maybe the number one reason why people struggle or are not successful, and it's they're just not doing enough activity in the field. They're just not prepared to do the activity and the hard work that it takes in order to be successful. Because I got to tell you, there's going to be days where you're going to be out there, get beat up in the field, right? You're going to get punched in the mouth, proverbially, hopefully not literally. And actually, one of the things that my good friend, Mr. Heath, that shared with me, it's kind of stuck to me, is if you haven't considered quitting this business yet, then you just haven't been in long enough. And I just want that to be a reality check to people. The best place that you can be is trying to build yourself to be emotionally resilient to where the highs are not as high and the lows are not as low. If you can kind of compress that and kind of maintain like your own emotional stability and just put your nose down and just put in the hours and effort that's willing to that it takes in order to be successful, that's going to maximize your potential to be successful. And conversely, the people that just aren't willing to put in the work, and by work as a full-time agent, I mean, you're out in the field 5 to 6 days a week, and 2 or 3 of those days you're out there until dark, right? That's really what it takes, especially in your first year before your residuals start coming in, to be successful. You got to put in the hours, you got to get in front of people, you got to get your presentations in order to close business, to make things happen. What are your thoughts on that, Dave?
Well, I totally agree with that. You know, activity is what I say is going to make you or break you in this business. It's either going to make you rise to the top with the cream or you'll settle. But if you think about it, JD, that's with anything. You know, you're starting your own business. You're a business owner. You've got to understand that is not easy anywhere. Don't expect it to be easy here. It's just not the way it is, but hard work, consistent work, and persistent work, I think, is the best way for you to go at it. And just to understand, you'll be at the top 1 minute, then you're flat on your face. You don't want to know how many calls, you know, I have. Trust me, it's crazy, but it's just the nature of the business. And again, going back to why a lot of people don't make it, you know, here it is. Yeah. All of these go into that percentage that we talked about that don't make it. But no, I totally agree on all 3 of those. And I'm really glad that I've over prepared, or we might not have anything for me to talk about. Because no, every one of those are exactly right. Now I do have a few more to add to it, I guess, for my 3.
Let me set you up here, David.
Else?
Let me just give folks a little bit more context to the situation. So in case you weren't here, or in case you joined us late, I'm a rookie agent out in the field selling full-time face-to-face. And then Mr. Heath, he's the coach of our independent broker for face-to-face agents. So everybody, or all of our coaches that we have, number one, they have experience writing business under their own pen. And probably maybe even more important than that is that they have experience training other agents to be successful out in the field. So just to give more context where Mr. Heath is coming from, he's been in the business, he's written policies himself, as well as coach and built other teams elsewhere, even before coming on with the Ford Insurance Group. And so he's got a lot of experience. He's seen a lot of things, and that's why I brought him on today to kind of dig into like, hey, Heath, you've talked to hundreds, if not thousands of agents. You've seen them struggle. You've seen them succeed. What are those commonalities? What are a lot of these agents getting wrong or making the mistakes that they're making that hopefully you, the person that's watching it, can avoid those mistakes? So without any further ado, Dave, if you'll go ahead and tell us what your thoughts are on those mistakes.
Well, JD, I think this one goes along with what you said when you're picking a group to work with. But I think the biggest thing is people go to agencies where the training is not top notch.
Hmm.
And I feel that training, to me, you know, you're number one, but my number one is training, actually. I think that's where it all starts. I think that's why the number is negative if you look at it in as far as people who make it in this industry. And I think the quality of the training, because like I said, we're going out here, we're starting our own business. Most of us just coming off the street wouldn't have a clue how to even start that process. But if you've got good training with good scripts and all the educational tools that you need, whether it be online tools, you definitely want to utilize all of that and make that decision before you get with somebody. And then when you get there, use it. You know, don't just let it sit there and be good. You know, like you said with your with yours, this would kind of touch on the you know, the activity level. If you're going to give that activity in the field, give it to studying and learning and utilizing the training that the company has for you, but make sure it's top-notch training.
Got it. So training for you, and then what would you say would be the second one you want to throw in there?
I would say trying to pick up too many carriers right off the bat. That is a large temptation. We're coming in here and we're brokers, right? So broker means I can offer you the best bang for your buck. And a lot of people want to jump right into 6 or 7 carriers right off the bat. I recommend 3 to start with, unless you're in just an exception. And that would mean you've been in the business and worked with carriers. But learning just the underwriting of these carriers, of 3 carriers to start with, is plenty for you to learn along with everything else you're having to learn. So that would be my number 2.
Got it. Excellent. So not getting too many carriers. I would agree with that because being in the group with the independent brokers doing face-to-face, I've seen some folks that kind of struggled when they're adding too many carriers. And really, to get started, I'd like you to expand on what you said, Dave. The reason why we start with 3 is because number 1, you're going to want a carrier that's going to be good for level coverage. Number 2, you want to get a carrier for like a graded or modified plan. And then the third one is a GI, right? So that's really the minimum you need to get started. And to be quite frank, is more options, gives you more options than the majority of some of these captive agencies that only allow you to sell just their one product, right? And so just with that plethora alone, you're able to cover 99% of the people that you're going to see and get them the best option available. And as you progress along, adding additional carriers that are really for niches, for specific conditions, whether they're taking a medicine for diabetes or dementia, depression, or COPD, or whatever it may be. There's going to be niches that you've got carriers that will offer them the best coverage. And again, those are just things that you can add to your arsenal as you move along, right? So if you're Robin Hood, you're starting off with 3 bows in your quiver, and then as time progresses, you're getting more specific with arrows that are more specific for certain situations, right? As you gain experience, knowledge, skills, and all of those things. So fantastic. And then number 3.
Well, also on what you just said, that kind of goes back to finding the place with the right training, doesn't it? My third one would be not putting enough emotion into their script when they're going out in the field. When we're getting indoors, we're door knocking, we're getting indoors. Then what do we do? Of course, this is going to go back to training. You want an agency that has a great script, and then you need to utilize it to the fullest potential. That means you need to create emotion while you're in the house. And you may ask, why would you say that? Why would we want to create emotion? Well, the reason we do is because, hey, folks, it's life insurance. We can say that word on here, right? We're talking about death. This is going to pay at death. There's nothing more serious to me than what's going to pay at death, because that has to be guaranteed in there. So why would we not bring it up as we're talking to clients or prospects? The reason most of them don't is because they're worried. They're uncomfortable talking about death. Maybe they have a problem with death. Death is something that's going to happen. We know it is. We just don't know when, right? So if we're putting emotion into our presentation, we're going to be letting them know that this is common. This happens. It's not unusual, Mitt Jones, for me to see this. And then we want them to see what it would look like if they didn't have any coverage. And as we walk through that journey, it's going to get a little emotional. And if you don't bring that to it, especially right off the bat, I think it's a lot more difficult to make it.
Yeah, I would agree with that. The thing that we're selling is a one intangible thing, right? That's life insurance product. And fortunately, the way that the product works is the person buying it's never going to reap the rewards or benefits personally, right? This is to protect their family from them leaving a burden behind and their family having to come up with, in some cases, tens of thousands of dollars to cover their burial, right? And so there's got to be some type of emotional response, and I'll tell you, by doing that emotional response, it's also going to help your persistency when that person thinks about canceling that policy in the future. If they come upon rough times financially, which we all go through highs and lows, right? They're going to remember that emotion a lot more so than whatever your sales pitch was in the home. They're going to remember that feeling and the reason why they put it in place to have that peace of mind, as opposed to being exposed to leaving that burden for their family. So yeah, 100%. I love that. One more thing here. So it's never a real YouTube video unless you add a little extra on top, right? A bonus, if you will. So I'm going to throw in a bonus, Dave. If you want to think about a bonus, here's one that I feel like is, it was critical for me, and that's the reason why I bring it up. I would tell you one of the biggest mistakes is not being prepared for chargebacks, because let me tell you, they're going to happen. They happen to all of us. There's not a single agent that I'm aware of that keeps 100% of their business on the books that they write. It's just not possible. Again, alluding to what I just said before, people are going to go through financial situations and they're going to cause them to not be like, when it comes down to putting food on the table or paying their light bill or paying their life insurance, sometimes they're going to have to make those difficult choices. Or it's been, a certain period of time since your presentation, you didn't build in that proper rapport or emotional response that's tied to that product that you sold them to. And they're going to feel less emotional about it. And they're going to feel like, it's easier to let that go. So just being prepared for the chargebacks, because let me tell you, I'm going to tell you specifically when the chargeback is going to happen to you. It's when you've had a rough week. It's when you either screwed up your lead flow, you don't have enough people to see, or the people that you go to see, they don't want to talk to you. That's the time that your chargebacks are going to happen, right? When you're already down in the dirt and you're getting kicked in the stomach, that's when a chargeback is going to happen to you. And it just feels like, I just can't make it. How does anybody make it in this business, right? Nobody wants to talk to me. I can't find a good lead. And the people that I do sell, they're canceling their policies on me, right? That is going to happen to you. And again, in case you missed it earlier, one of the things that have stuck with me in my head that I got from Mr. Heath is, if you haven't thought about quitting this business, then you haven't been in long enough. And I'm not trying to paint a bad or negative picture. I just want to be just like David DeFord does. 100% transparent, no BS. If you can expect these things prior to coming into the business, as opposed to being sold, you're going to be, overnight millionaire. If you know that there's going to be challenges, that you're going to run into these situations, unfriendly people, unfavorable living conditions in some of these houses and apartments and trailers that you go into, if you know those things going into it, if you know to expect some chargebacks are going to happen, then it makes it that much easier to deal with when they do, because they were going to happen. So David, any thoughts on that particular mistake to avoid, not being prepared for chargebacks, or bonus one that you want to add on top?
Well, as far as being prepared for chargebacks, I agree with that totally. I think that, that is very common, because we're just not thinking about that option out there. And I usually tell folks, the devil comes at you when you're down, right? Why would you not think you're going to get chargebacks when you're already down? This makes sense to me. But yeah, it's a test. And this business will give you a lot of tests. Depends on how you take those tests, how you overcome them, how you handle them. But yes, I totally agree with that, JD. And I guess for my bonus, this may irk somebody, I don't know, or start a hysteria or something, but I think calling your appointments up front is a mistake at times. Now, before I get into it, I'm going to put in a clause there that there are exceptions to the rule. Okay. Got to throw that in there if I'm going to say this. But yeah, for me anyway, when I started out, I was calling and calling and calling, and I did okay. But I didn't learn a lot of things that I should have. The reason I think you should go out and start door knocking right off the bat is because you're going to learn so much getting in those doors on your own that it's almost irreplaceable. If you've got a good training program, you're going to be going over that, with whoever your coach or mentor is, and learning from these experiences. I've heard people say that, they've done a lot of things and they've learned more in 2 months of life insurance than a decade in other industries. But it is, you're gonna learn so much, and I don't feel that you are gonna totally get it unless you've had to door knock, get into houses, make it work. I know people that do nothing other than door knock who have been in this business for literally decades, and that's still what they do. But I do think at first, with an exception thrown in there, most of us are not prepared for what we're going to get on the phone. And if we don't handle it correctly, JD, then we've lost that one. Of course, here we've got a way out. We're face to face, right? We're still going to go door knock them. They won't remember you. But yeah, I think that often the first month in the business is critical. And you want to make sure that everything that you do is in line and focusing on an ultimate goal, because it's for some folks, it's literally make or break, it seems like. So we want to make sure that we're definitely doing everything right. And I just think being out in the field, seeing people, talking to people, that's the better way to get a presentation at first.
Yeah, I couldn't agree with you more. And as a matter of fact, for the folks that are not in our agency, and if they didn't know this, again, just to reiterate, David Heath is our trainer or coach for our face-to-face independent broker. We also have another trainer who's in charge of our career program for face-to-face agents, right? And that trainer and in that program, the career program, the requirement is that you do no calling, you do 100% door knocks, right? And it's not to say that calling people and scheduling appointments doesn't work. What we're trying to tell you is door knocking and being successful at door knocking is a critical skill for any face-to-face agent, right? And what's the best way to improve your skill set is to get as many at-bats as possible. And so that's why if it's critical for you to learn the skill of door knocking, we require you in the career side to 100% door knock all of your leads, again, just to get as many at-bats as you can prior to getting started. So that way we can help coach you through that process and learn the nuances and specifics involved in getting into houses and getting into doors, right? And so that's a critical skill that's important for everybody. And the other thing that I'll mention, Mr. Heath, is if you were only going to choose one, door knocking only and calling and setting appointments, which one of those will be more successful? And it's going to be door knocking, right? And like you alluded to, I have a very good friend in the business, my local mentor who has been riding out with me. His name is Gatlin. He 100% door knocks all of his stuff. He's been in the business for over 10 years. So if that tells you anything, right, is like do what the people that are successful are doing, and you will likely have the same or similar results, right? And so I couldn't agree with you on that one more. So I like that. Thank you. So now this is a part of the show. In case you missed the earlier part of it, this is the Ask an Agent where we're fielding your questions, and we're going to ask some of our guests today, Mr. David Heath, who's, again, he's got a number of years of experience in the business, both in the field as well as training agents. And then I'm a rookie agent. I'm in my first year, so I'm providing a little bit different perspective than old Uncle Dave. Bless his heart. We're thankful for everything that he does. The reason why the majority of us are here today in the business. But again, it's been some time since he's been out in the field, and maybe I've got a different perspective being fresh in the field, doing it on a daily, weekly basis, and as well as Mr. Heath experience as far as being out in the field himself, as well as training agents to be successful. So we welcome your questions. We want to answer your questions that either one of us can give our perspectives on it. And to get us started here, first question is, I am with a certain company. I'm going to leave that part out. The question is, are they considered to be a bad agency? I've been with them for 3 to 4 months. If you guys had to start over, what would you do to ensure your success? So great question, Makai. So here's what I'll tell you. I don't believe that a bad agency exists. Okay. Here's the catch, the caveat to that. I believe that there could be a bad agency, or not a bad agency, but a bad fit for the agent, right? Because all of these agencies that we're talking about, they've been around for a number of years. They've got people in their agency that are successful, right? But you've got to decide, you've got to do the homework and figure out which one of these agencies is going to be the best fit for you. Again, alluding back to the conversation we had at the beginning of the call is choosing the right agency to work with. So you can choose an agency, again, that's a captive carrier. It's simple to learn their one product. That's all they offer. You can choose to go the MLM route where they're focusing on having you recruit other agents to get into the business, or you can choose an agency like us with the Ford Insurance Group, where you're an independent broker, have access to multiple options and multiple carriers, multiple products. And then in addition to that, there's no emphasis on recruiting, right? Our goal is to make sure that you are successful as an agent out in the field on a long-term basis. Should you want to add build an agency or cross-sell, add other products later, we do encourage and support that, but it's not a requirement to be with us. Again, we're not focusing on recruiting. So again, to answer your question, is where I'm at a good fit? Well, it depends, right? And if you're not sure, maybe looking around at other agencies, If you're asking that question, maybe you're not getting the right training or you don't have the right network or support to make sure that you're successful. You just have to find which agency is going to be the best fit for you personally to maximize your potential to be successful. So hopefully that answers that. And then I'm going to let you answer this part of it, Dave. If you were to start over, what would you do in order to ensure your success? I want to hear what your thoughts are.
Okay. Hang tight on that. When you're looking at an agency, you want to look at their training. You want to look at the commission that they pay you. You want to look at how often you're able to speak with someone to help you. And you want to look at, do they provide resources that's going to allow you to grow in the business, but also speed up your advancement in the business. So that'll kind of let you know what you need to be looking for in case anybody wants to know that. Okay, JD, what was that question again?
The question is, if you were to start over today, what would you do in order to ensure your success as a final expense agent?
If I were to start over, well, I'd probably pick a different place to start, first of all, but maybe that's not the way it was supposed to be, huh? But I would have looked for a better place. I didn't realize the options that were out there when I started. I probably didn't research it well enough, just to be honest with you at first. I just kind of went for the first thing, the first group that contacted me, and I just kind of went on board. It was pretty local, so I thought, well, that's not too bad. But no, I should have researched what I just talked about, especially commissions. That's what makes or breaks you, is money. You want a company that's willing to give you good commissions, but also you've got a spot for advancement. And, you want to make sure that that's there.
Got it. To add on to that, if you wanted my answer to what would I do to ensure your success. So I actually started out in the insurance business, focusing on ACA and Medicare. And I actually started during open enrollment. So if you're not familiar, if you've never sold health insurance before, that's kind of more what they call a get rich slow methodology, right? The majority of the way that people make money in that, or the way to make money in that, is a residual based income, right? You're kind of building and stacking it up over time. The difficulty or challenge into doing that is we got bills to pay today. We can't wait for a year or two or three whenever we've built up a significant business, right? And the other challenge to starting off in ACA, especially during open enrollment, is all the business that you write during open enrollment during, October, November, December, those are for plan effectives for January 1st. And guess what? At least in the ACA market, you're not getting paid January 1st. You're getting paid like February, right? And so you're writing business, the work that you're doing in September and October, not getting paid and oftentimes until February, right? And that's kind of how I started the business. I would not recommend doing that. I would recommend starting with final expense, which is what I transitioned to in January, when about the time that we started putting out this new coaching program, and Mr. Heath was able to dust the dirt off my back and pat me on the back and make sure that he gave me the tools and resources to be successful, because I was in a bad place financially and emotionally at that time, to be honest. And if it wasn't for the support of DeFord Insurance Group, number one, but more specifically, Mr. Heath, I wouldn't be here today. So I would recommend making sure starting in final expense would be a good option. Next question I've got from Christian says, what type of post-sale touch points do you recommend to keep as much business on the books as well as increasing chances for referrals? Dave, I think this is a great question for you. Go ahead.
Okay. Well, there's a lot of different ways. Birthdays, just sending a text to your clients on their birthday. Other holidays, just sending something to them at that time. One thing that I do a lot of, or did, I keep saying do, I've actually been out of the field for a little bit, but which feels unusual, but I would drop by and see them. You know, if I was in their area, I would just swing by and say, hey, I don't have much time, but I just wanted to come by and say hello. You still got my number, right? And, you know, just something like that. And I think touching them personally like that, and I'd send them the birthday, you know, things like that too. But the real thing was touching them personally, I think, because a lot of times they'd be like, well, yeah, I got so and so that needs to talk to you. Yeah. If I wouldn't have dropped by and just seen how they were doing, I
Mhm,
wouldn't have been able, because who knows if they really would have thought of me
mhm,
to write them again. I would hope they would, but it's not a guarantee. But just soft touches like that, they've got software set up now to do that, I think. And but basically that, and then I've seen people do you know, like mail birthday cards on
mhm.
their birthday. Nothing wrong with that. I think that's great too. Um, so there's a lot of different ways that you can keep in touch with them. I generally don't call them, is what was my rule a minute ago. I just go by and see them. I
Mhm,
want them to know it's me. They might have forgot my name.
mhm,
And if they have, they'll remember me when I get there.
mhm. I like it. Here's a couple things that I'm going to jump on that both things that I'm doing now, Christian, as well as things that I would like to add into my business. So one of the things that I do is whenever I write an application, I purchase these folders on Amazon, these glossy white folders, and I put this bright yellow heavy cardstock paper in there. And what I do is it's got like a business card sticker on the front of it. Inside of it, it's got a magnet business card that I'll throw on their fridge while I'm there. And then on the sheet itself, it's a bright yellow sheet. I've got all my contact information in all three of those places. And I write down all the specifics of their policy, because if you're new to the business, you didn't know this, whenever you write an application, it's going to take them, what, Dave, like 3 to 4 weeks oftentimes for the policy to arrive by mail. Okay. And so what I'm doing is I'm writing down all the details, the date that we applied, the date the coverage start, the name of the carrier. I even put the phone number and the policy number to the carrier. And I tell them, if for some reason, God forbid, something were to happen to me, you still have access to your policy, right? And I feel like leaving that leave behind in the house is good. Both somebody, you know, having that folder there, they're going to remember you a little bit better. They're going to have your name and your phone number up on the refrigerator. I feel like it's a great touch point to leave behind, again, and as a placeholder until their policy arrives. And then the other thing that I would recommend, of things that I'm currently not doing that I would like to do, I've seen other people do successfully, is like Dave said, number one, send out thank you cards. Uh, Pick a day of the week, Fridays, Mondays, whatever it is, that you write handwritten thank you cards to all of the people that you've wrote business for that week. Like that goes a long way, right? And then in addition to that, adding you know, holiday cards like Christmas, their birthday. I even thought on the anniversary date of the day that they bought their policy would be another day, like, hey, congratulations, you got through year one, especially if they're on a waiting period, right? I think those are good options. And I've seen other agents recommend sending cards on off or less popular holidays. So instead of doing Christmas, 4th of July, which is probably the biggest ones you see, like do a Thanksgiving card, do a Valentine's Day card. Like they're much more likely to remember those if you're the only card they got for that holiday, right? And so I think those are really good ideas, something that I would like to implement and do a better job of in my business. The other thing that I feel like adds on to your persistency and in order to keep people on the books is by adding more than one policy. Now that can be either you're selling them another final expense life insurance policy down the road, or maybe they're a young person, they're in their 30s and 40s, and maybe a term product is good because they've got dependents depending on their income, or they've got a mortgage that they need to insure, like to cover, right? Maybe you're writing a policy specifically for that in addition to a whole life policy, or you're writing, maybe they can only afford so much today, and then in a year from now they want to add on to that. Or you're adding things like a Medicare plan, you're adding things like a hospital indemnity, cancer plan, critical illness, dental, hearing, vision, all these other policies. The more hooks that you put into the person, the more policies you have written for them, the less likely they are to go somewhere else, right? I feel like that's another way to increase or manage your persistency with folks. Any thoughts on that one, Dave?
No, I I totally agree with that, JD. Yes, the more touches you can have with them, and try to get their family members as referrals. Try to get as many family members also. That way, they know who they need to contact. Period.
Got it. All right. I've got another question here. What would you say is the realistic amount you should expect to make in your first year following the golden rules that we've laid out? And is 40 hours a good amount of time to dedicate? So I'm going to answer the money, because I spend a lot of time with the onboarding team, and this information is available on the FAQ page. So I'm going to give you the company answer, and then I'm going to let Dave answer as far as the 40 hours, right? So to answer the question about how much to make for the first year, it is very reasonable to expect in your first year of business, if you follow the program, the training and the recommendations, purchase the leads like we recommend doing, for somebody to take home in the neighborhood of $50,000 to $75,000 in their first year. And then moving into year two, somewhere in the neighborhood between $100,000 to $200,000 in their first year or second year and years beyond. And that's because you're going to start adding on residuals, right, that you're gaining later in business. Now, that's not to say that everybody hits those numbers. There will be, of course, people that don't make it. And there will be, of course, people that go above and beyond it, right? The top 1 or 2 percenters that in their first year, we have had people that have written $100,000 to $200,000 or take home $100,000 to $200,000 in their first year and 3 to 4 in their second year. So, but again, it's realistic to expect in the range around $50,000 to $75,000 take home. Again, should you follow the practice and the training and the skills and the lead and everything that we're recommending you doing, that is a very reasonable income to expect. And then Dave, as far as is 40 hours, and we're going to answer this as a face-to-face answer because we're both face-to-face folks. Is 40 hours a good amount of time to dedicate to working in the field?
Depends on if where you're at now, you could make 50 to 75,000 with no overtime. No, you're probably going to have to go above and beyond that to start off. Remember, we're starting a business. If you were building a factory and you were going to be running that factory, could you work 40 hours a week? No. And same way with us. You may have some weeks where you can work 40. I would say, you're going to have to work more than that. A lot of times I would work 50, sometimes more than that. And a lot of that reason was because success on Saturdays. So if you work 40 during the week minimum, then Saturdays is going to be overtime anyway. So 40 is a good start, but I think really to be successful and hit those numbers, you're going to have to spend more time than that in the field, face to face, especially, door knocking. Yes, it'll take more than that.
Yeah, I would agree with that. And it can be a challenge for some people. I, for one, came into the program as a part-timer, and Mr. Heath will tell you that the success rate of people that are coming as part-timers is a lot lower than it is full-timers. And that's for a number of different reasons. Number one, just not putting in enough activity. But what will happen is you're only working part-time. Let's say you're selling 1 or 2 policies in a week. Well, what happens in 3 to 4 weeks from now when 1 or 2 of those charge back on you, right? You just don't have the safety in numbers that I've heard David DeFord use that you would as a full-time person, right? When you average selling 5 to 8 policies in a week with 1 or 2 lapsing, not as big of a deal as when you're writing 1 or 2 policies a week. So if you are going to come into it on a part-time basis, I think it should be every person's goal to get to a full-time, right? And I was in a situation where I was working full-time, doing construction management. They were kind of tightening down the levers on me, right, as far as where I was, when I was, and that kind of thing. I was trying to sneak out as early as possible so I can get on to selling policies. And eventually they tightened those things down on me to where it was going to make it extremely difficult for me to put enough hours. It's already a challenge as a part-timer, but even more so on the more and more you limit your time. So what do we recommend? What would be a good strategy as far as getting your hours or activity in the field? I would recommend, and I'm getting this from Mr. Heath, is you're going to want to put in about 5 to 6 days a week at a minimum. And 2 or 3 of those days a week, you're going to be working well into the evening, essentially up until dark, right? If you've got appointments that are even after dark, great. You can, Mr. Heath will tell you stories about getting into houses or leaving houses at 8 or 9 o'clock at night. Like that happens, but you just got to be prepared to put in the hours. The more hours you're putting in to the field, the more likely you are to be successful, right? That's just the reality of it. And people think coming in, if you've coming from a place as an employee, into being an insurance agent, into being an entrepreneur, into being a business owner. Everybody thinks they're giving up their 40 hours a week so they can go sit on a beach and work from a laptop 2 hours a day, right? When the reality of it is, being a business owner, 40 hours is like the bare minimum in order to be successful. Now, are you going to have to put in those hours for the rest of your life? Of course not, right? That's not anybody's goal here. You want to build up that residual income and referrals and things of that nature. But to get started, just know it's going to take some time, effort, and energy to be successful, right? All right. Well, looks like we've covered the questions that have come into us, Mr. Heath. I want to thank you for your time here on the Ask an Agent. If you guys like this format, we're testing this out. Hopefully you guys can appreciate seeing other faces on here other than just Dave himself. I will be doing more of these interviews with other DIG personalities, folks from within our agency, including Mr. David DeForth himself. I will be interviewing him, asking him all the questions that you want to know from him. So be sure to tune in. Again, the Ask Agent show is going to be weekly on Wednesdays at 1 o'clock Central. So do the math on what that time is, equates for you, depending on what part of the country you're in or what part of the world you're in. And that way you can tune in live to get your questions answered. I want to say thank you to my guest today, Mr. David Heath. Thank you very much for joining us.
Thank you for having me, JD. It's been a blast, and I hope it's been beneficial for everybody out there.
Excellent. And if you guys are interested in learning more about our agency, go ahead and go to daviddefor.com. If you go to the FAQ page, that's going to answer about 99% of the questions that you probably have about our agency. And if you're ready to jump in right away, you can hit the apply. Go ahead and apply now if you think that'd be a good fit for you, or jump into a group Q&A, where it's private on Zoom. We'll private to a small group, not live on YouTube, where you can kind of ask your questions, your burning questions that you may have about your specific situation or things that we're not able to cover here. But again, thank you so much for joining us today. I hope to see you guys on the next one. And thank you again to our guest, Mr. David Heath.
See y'all.
Boom.